Greetings, listeners of Stock Explorers, and welcome back for another deep dive.
Great to be here.
So today we're tackling some pretty major news. The U.S. has just slapped some really significant tariffs on solar imports. We're talking Cambodia, Thailand, Malaysia, Vietnam.
Yeah, and significant is almost an understatement. Some of these duties are apparently hitting, 3,500%? It's huge.
Exactly. Just wow. So our focus today is pretty sharp. What could this all mean for one specific American player, First Solar, especially for potential investors watching this space?
Right. First Solar is definitely a key company to watch here. They've been around since 1999, based in Arizona.
And they're interesting because they don't use the same tech as everyone else, do they?
Not exactly. While most of the world, especially China, is heavily into crystalline silicon panels, First Solar's whole thing is their proprietary cadmium telluride thin film technology, CDT.
TDT, got it.
It's a different approach. And importantly, they're the only big global solar player headquartered in the U.S. that doesn't manufacture in China. That's a key distinction now.
Okay, that makes sense. And financially, they seem to be doing pretty well even before this news broke. Looking at 2024 numbers.
Oh, yeah. 2024 was solid for them. Revenue was, $4.21 billion. Operating income around $1.39 billion. Net income, $1.29 billion. So, yeah, a healthy picture already.
Healthy indeed. And they've been putting money into U.S. factories too, right? Not just relying on overseas production.
Absolutely. That seems incredibly strategic now, doesn't it? They've got 3 plants in Ohio already.
Yeah.
Then there's the big $1.1 billion facility in Alabama that just opened last September.
Okay.
And they're not stopping. Another $1.1 million plant is under construction in Louisiana. That was supposed to be online in 2026.
Wow. Okay. They're really doubling down on U.S. manufacturing.
Yeah.
So connecting the dots, these huge tariffs, First Solar's unique tech, their U.S. focus, the financials, what's the potential upside here for them, for investors?
Well, the biggest, most obvious thing is less competition, plain and simple. These tariffs make panels from those 4 Southeast Asian countries incredibly expensive to bring into the U.S., and those countries were, the source for over 80% of U.S. solar module imports.
80%. That's a massive slice of the market suddenly facing huge cost increases.
Exactly. So the competitive landscape just got tilted significantly.
And wasn't First Solar actually one of the companies pushing for these tariffs? They weren't just bystanders?
That's a really important point. Yes, they were part of the coalition, the petitioners who brought the trade case forward. So you could say they actively sought this outcome. They likely anticipated this kind of benefit.
Okay, so they saw this coming or at least hoped for it.
Yeah.
And the market reaction, did it reflect that? What happened to their stock price?
It reacted pretty strongly, yeah. The day the news broke, April 22nd, the stock jumped, I think, over 7% in pre-market trading alone.
Wow.
And then it kept climbing during the main session. Reports put the gain somewhere between 9.9% and 12% for the day, a really strong vote of confidence from the market.
That's quite a pop.
Yeah.
And what about the flip side? The company's hit by the tariffs.
Well, as you'd expect, shares of major Chinese manufacturers like Jinko Solar, J Solar, Canadian Solar, they dipped. Companies with big factories in Southeast Asia felt the pressure too.
It makes sense. But interestingly, it wasn't just First Solar getting a boost on the U.S. side.
No, that's right. We saw other U.S.-focused solar stocks rally too. Sonova Energy was up, SolarEdge, Maxion. It suggests a kind of broader optimism, maybe, a feeling that this could lift the domestic industry more generally.
Okay, so less foreign competition. Does that mean First Solar can basically charge more now? Do they get more pricing power?
That's definitely a likely outcome in the U.S. market. With fewer cheap imports flooding in, the sort of price floor gets lifted. Those Southeast Asian panels set a low bar before, and now that bar is much, much higher due to the tariffs.
So First Solar has more room to maneuver on price.
Exactly, which could, directly translate into better profit margins on their U.S. sales.
And logically, if imports become super expensive, U.S. buyers will look domestically. Does this mean First Solar could grab a bigger piece of the pie, more market share?
That's the expectation, yeah. Solar developers, installers here in the U.S., they need panels. If the main source suddenly gets tariffed out of reach, they'll naturally look for alternatives.
And First Solar is ramping up production right here.
Precisely. With their capacity growing expected to top 14 gigawatts by 2026, they're really well positioned to capture a lot of that demand that might have previously gone to imports.
Are analysts picking up on this? Are their forecasts changing for First Solar?
Oh, definitely. You're seeing projections for significant improvements in their financial metrics. Things like return on capital employed One forecast saw it potentially going from about 10.5% in 2023 to maybe 21.5% by 2027.
That's a big jump.
It is, and operating margin too potentially climbing from around 25-26% to possibly over 50% in the same time frame. Now, these are projections, of course, but they reflect the expected benefit from this much less crowded competitive field in the U.S.
And we keep mentioning it, but that unique thin film tech, the CDTT, that's still an advantage too, separate from the tariffs.
It absolutely is. It gives them another way to stand out from the crowd, especially from the silicon-based manufacturers. It has its own performance characteristics, different supply chain. It adds another layer to their competitive moat, you could say.
And that heavy investment in U.S. factories, it just looks smarter and smarter now, doesn't it?
It really does. It insulates them directly from these specific tariffs on Southeast Asian imports. While competitors relying on factories in, say, Vietnam or Malaysia are scrambling, First Solar's Ohio, Alabama, and soon Louisiana plants are unaffected by these particular duties. It's a huge structural advantage right now.
You also mentioned their supply chain control, vertical integration. How does that help?
Well, having more control over the whole process from raw materials through manufacturing potentially makes them more agile. They might be able to react faster to these market shifts compared to companies juggling complex, fragmented global supply chains spread across multiple countries and suppliers.
Right, less likely to get tripped up by disruptions elsewhere.
Potentially, yes.
And let's not forget the other big piece of U.S. policy, the Inflation Reduction Act. That's still helping them too, presumably?
Absolutely. The IRA provides significant subsidies and incentives specifically for domestic clean energy manufacturing. So First Solar gets a boost from that on top of the protection offered by these new tariffs.
Yeah.
It's kind of a double benefit, strengthening their position and ability to expand here.
Okay, so it sounds like a lot of green arrows pointing upwards for First Solar in the U.S. But life's rarely that simple, right? Are there nuances or potential headwinds investors need to consider?
That's definitely the right question to ask. It's not all smooth sailing. One key point is that First Solar does have its own manufacturing outside the U.S.
Oh, right. Where?
They have facilities in Malaysia, Vietnam, and also India. So imports into the U.S. from their own factories in those countries will also face tariffs.
Oh, interesting. So they get hit by their own medicine, so to speak.
In a way, yes, though likely at different rates than the ones aimed primarily at circumventing Chinese duties. One analyst, I think from Barclays, put out estimates maybe 46% for panels from their Vietnam plant, 24% from Malaysia, 26% from India. Still significant.
Okay, so that could definitely impact their bottom line from those international operations.
It could. The same analyst estimated the potential hit at maybe close to $500 million annually, or like $375 million just for the rest of this year, 2025. But there's a caveat. First, Solar has mentioned that their contracts often have clauses built in to handle tariff risks, so they might be able to pass some of that cost on or have other ways to mitigate the full impact. It's not entirely clear-cut how much it will ultimately cost them.
Okay, so something to watch. What else? Any broader market effects?
Well, you have to think about supply. Suddenly taking potentially 80% of imports offline, even with First Solar ramping up, U.S. domestic production might struggle to fill that gap immediately.
That could lead to shortages or higher prices for solar projects overall.
It's possible, yeah. Short-term supply constraints could happen. And that could maybe slow down the pace of solar installations in the U.S. temporarily if panels become harder to get or significantly more expensive across the board.
And we've seen this movie before, haven't we? Companies finding ways around tariffs.
We have. History shows manufacturers are pretty adept at shifting production. When tariffs hit China directly, production popped up in Southeast Asia. Now that Southeast Asia is targeted,
They might move somewhere else.
exactly. Maybe places like Laos or Indonesia, we're already seeing some signs of imports maybe increasing from regions not covered by these specific tariffs. The whack-a-mole game of supply chains could continue.
And zooming out even further, what about the global picture? Isn't there just a ton of solar panel manufacturing capacity worldwide?
Yes, that's a huge factor. There's massive global overcapacity, especially driven by China. So while the U.S. market might become more protected and potentially higher priced,
Prices everywhere else could stay low or even fall further.
precisely, that global glut could keep downward pressure on panel prices outside the U.S., which might mean U.S. solar developers face higher costs for panels compared to developers in other countries, potentially creating a bit of a cost disadvantage for projects here.
Okay, so summing it up, these tariffs look like a major boost for First Solar within the U.S., less competition, better pricing power, a chance to grab more market share. But investors need to weigh that against the hit to their own imports,
Yeah.
potential market disruptions here, and the fact that companies might just shift production again, plus the global oversupply issue.
That's a very good summary. First Solar looks, really well placed strategically because of their U.S. factories, their unique tech, and the fact they actually asked for this. But yeah, there are definitely complexities and dynamics still in play. The long game is still unfolding.
Absolutely. Well, this has been incredibly insightful, really helping unpack what this tariff news means on the ground, especially for First Solar. For all our listeners wanting to stay on top of market-moving news like this, please do subscribe to the Deep Dive. Give us a like if you found this helpful, and definitely hit that notification bell.
Yeah, and it leaves you wondering, doesn't it? How exactly will First Solar use this strengthened home field advantage? Will they just consolidate in the U.S. or use it as a springboard for more innovation, maybe even push harder globally down the line? It's going to be fascinating to watch.